I am Dr. Thomas, and my Twitter ID is ThomasAVP77. So I am both a trader and investor. So I used to share both my trading performance as well as my investing preferences in Twitter. So whenever possible, and I recently posted that I have a very high conviction in LIC. So I am buying LIC shares almost constantly. So whenever I have some trading profits, I am putting it into buying LIC. People who are following me will know that I have quite a high conviction in LIC. So I thought I would try to give a presentation based on my analysis, my observation, whatever I know about LIC, and all publicly available information. But I have made my analysis before investing in LIC. I am trying to share it to you. But anyhow, I am not a sebi registered research analyst, so I never intend to become a sebi registered analyst. So keep that in mind. So do your own due diligence, and let's jump into it. So my conviction is that if you buy LIC now, so around 900 rupees, so something like that, and my idea is to hold at least 5 to 10 years. So by long term I mean 5 to 10 years. When it comes to investing, my holding period is at least 5 years. Okay, so in that time frame I am expecting maybe at least 5 times or more than that. So I am expecting a multi-bagger return. Okay, let's jump into the details. Okay, let's start with comparing with the uh, other insurance companies. So let's compare with the peers of the same sector. Okay, so SBI Life Insurance, HDFC Life Insurance, ICICI Prudential, Max. Okay, and so in market cap, life insurance, our LIC just beats the other companies with a huge margin. So it's around 6 lakh crores is the market cap. But remember, this is the total market cap. The free float market cap is too low. I'll come to it later. Okay, and for the other companies, the market caps are less. SBI Life somewhere around 2 lakh crores, HDFC 1.5 lakh crores, ICICI Prudential 1 lakh crores. Okay, so market cap is big, which is an advantage. Obviously, more reliability, more liquidity, and the next thing to consider is the price to earning ratio, P by E ratio. P by E ratio LIC is unimaginably low, somewhere around 11. It means that it is hugely undervalued. So there is a very good value in buying this company at this price. Of course, I accept and understand the fact that not every company with low P by E is an opportunity. So sometimes some companies have low P by E due to some fundamental flaws in the company. So fundamentally something is wrong, so the market is not giving good price in spite of its earnings. Okay, but here there is fundamentally nothing is wrong. So the P by E ratio is low. Sometimes markets are known for mispricing. Okay, it happens always. That's how value investors have made money, by identifying the mispricings. Okay, so it is hugely undervalued, that's what I mean. And the P by E ratio is somewhere around 10-11, which means that if I am putting 100 rupees, the company is earning annually, it's earning somewhere around 9 to 10 rupees, even much better than the fixed deposit. So it's a big thing. For context, you can see the other companies, SBI Life, HDFC Life, they are trading at a P by E ratio around 70, 80, something like that. Definitely overvalued. Okay, so market cap is good, P by E ratio is good. Okay, so from here let's go to the point at which the IPO was launched. So I collected some data from the red herring prospectus, and let me discuss that. Before that, embedded value. Regarding embedded value is practically the way the intrinsic value of insurance companies are calculated, or embedded value is practically the intrinsic value of that decides the book value, or their for insurance companies. Okay, so LIC, the current market price is almost equal to embedded value. To be right, the embedded value right now is around somewhere around 8 lakh crores. So actually, to be frank, the embedded value is slightly higher than the total market cap, which is a huge benefit, which again means that it is underpriced. Okay, so embedded value, for most companies we will accept book value as the liquidation value, but for insurance companies, embedded value makes a little bit more sense than book value. Okay, so in that prospect also, LIC is much better than the other companies. For other companies, the current market price is 3 times the embedded value. For HDFC Life, 2 to 3 times the embedded value. So again, this is one more evidence that LIC is hugely underpriced right now. And during IPO launch, just what happened is the embedded value during the IPO launch itself was 5.5 lakh crores, which is very great actually. Okay, so you are right now it is 8 lakh crores. So it again says that the embedded value has grown. So the company has grown its assets and it has grown its reserves and surplus. That's why the embedded value has also grown from 5.5 to 8. But anyhow, at the time of IPO launch, the embedded value was around 5.5 lakh crores. Based on that, for equity financing, what the company decided was that they will go for an authorized share capital of 25,000 crores. Out of that, they decided that the issued share capital will be 6,000 crores. 6,000 crores will be issued at, so 600 crore shares will be issued at 10 rupees face value each. So that was decided in the RHP. And out of this 600 crore shares of value 6,000 crores, only 210 crores were offered to public. 3.5% of the issued share only were issued to the public. The remaining 96.5% was held with the promoter itself. Okay, in this case, the promoter is the government. And by public, we don't mean a retail investor. By public, this only 3.5% to the public, which includes domestic institutional investor, FII, and retailers. So totally only 3.5% is liquidated. To be frank, it's not even an IPO. It is actually an offer for sale. Okay, there are some minute differences, but let's not go into that. Similarly, I also I want to go in detail about embedded value. Actually, it's book value plus they price in the future earnings of the existing policies. So that's not necessary. We will focus on things which matters to us in deciding what the actual value of LIC is, whether it's underpriced, whether it's going to grow it to future. That's what we are not auditors. Okay, so we will focus on information which is needed for us. Okay, so what happened during the IPO? Face value was 10, but it was price. The IPO price went up somewhere around 1,000. So I am also approximating it same around 900 to 1,000 rupees. So the IPO launch price was 1,000. So total issued shares 600 crores. 600 into 1,000, 6 lakh crores is the market cap. That's how the market cap happened. And but actually, out of which only 21 crores of shares were given to the public. So 21 crore into 1,000, 21,000 crores is the amount. Actually, be focused on this. Try to understand this. 21,000 crore is the amount which LIC gained or received from the public as a premium. So face value was only 10, but 990 rupees premium. That was a huge premium. So it earned or something like a bonus suddenly due to the offer for sale, due to the IPO. The IPO itself got them 21,000 crores. So it's like a sudden bonus or a sudden that's the point of equity financing, isn't it? So any company can finance their operational activities by two means. One is debt financing, another is equity financing. By this equity financing, they were able to get 21,000 crores just by liquidating 3.5 crores, 3.5% of their asset. Okay, so that's the huge difference. This makes sense when we go and analyze their further into their balance sheet and profit and loss statement. Okay, so 21,000 crores they got during the IPO. Their market can be 6 lakh crores, but 21,000 crores is the cash flow which happened, which some sort of free cash which they got, which they can invest for future activity. The remaining amount will be held as shares within them, but that's right now not liquid there. This 6 lakhs crores is just some sort of virtual money. So this is the real money that happened during the IPO for the company. Okay. Okay, now let's come to the, so from the screener app I have opened the annual profit and loss statement, but before profit and loss statement, let's start with the balance sheet. So this is the balance sheet of LIC, and after the IPO you can see that there is a sudden increase in the reserves and surplus. This reserves value, there are three types of reserves. One is from the equity capital, and the another equity capital, they can't do anything, they have to keep it. Okay, something about companies, if you don't worry much about it, but equity capital is one thing. So this is the equity capital. You can see that it's always remains the same. And what is more important is that you can see that the reserves and surplus has suddenly jumped to 39,000 crores from 5,000 crores. Before that, 900, 6,000, 5,000 and 39,000 crores. This happened due to the securities premium amount they received during the IPO. We calculated it, isn't it, 21,000 crores that contributed, and some more, and the rest, another 10,000 crores they earned due to their operate. That's an operational profit during this gap, this time 2022 to 23. So it was brilliant, actually. So the 21,000 crores which they received as securities premium receipt helped them to invest and earn more. So that's a very good thing. Not only that, in subsequent years, the increase in reserves is practically the net asset minus net liability. That's practically the book value. In real terms, book value per share includes both the reserves and equity capital, but practically equity capital will be the same. So you can see that there's some 39,000 crores, it is going 76,000 and 1,20,000 crores. It means that the operational profit is increased and they are reinvesting that. So the initial boost it happened due to the IPO premium amount they received, and they are growing beautifully. 39,000 crores, 76,000. Right now it is 1,20,000. That's the reason why the embedded value has also jumped from around 6 lakh crores to 8 lakh crores. Okay, and you can it will also be reflected in their profit and loss statement. You can see that the operating profit has jumped after 2022 from 3,000 crores to 34,000 crores, and then they are consistently making 32,000 crores, 50,000 crores per year operating profit. It reflects in the earnings per share also. Pre-IPO the earnings per share is around 6 rupees, and then 2023 56, and then 64, and right now it is 76 rupees. It's huge for a company which is trading at around 900 rupees, which is earning 76 rupees per share earnings, and that's why the P/B is around 11. Okay, so it's a hugely undervalued opportunity which you should not miss. If you are a value investor, you should not miss. You should just go and grab. Moreover, it's not a penny stock company, so it's a 6 lakh crore market cap company, so there cannot be much of trust issues also. Okay, so that's about the balance sheet. And a quick shout out to Zerodha Varsity. So Zerodha Varsity is a wonderful book to understand. If you want to understand the share market investing, it's a very good book. Okay, Karthik Rangappa has done an extraordinary work. Whenever there is an opportunity, I make it a point to appreciate that. So there are three types of reserves, as I said: capital reserves and securities premium. This is what we are talking about. And general reserve is due to what by reinvesting their operational profit, the amount that company starts accumulating. So the reserves are the contributions to the book value of the company. So remember that. And so in the NSE website, you can see that the total market cap may be around 6 lakh crores, but the free float market cap is only 19,000 crores, because only 3.5% is liquidated in offer for sale. The remaining is with the company. By here, the promoter, the company, we mean the LIC entity. Practically it's the government for all practical purposes. And the free float includes DII, FII as well as the retailers. So you can see promoter group 96.5, public 3.5. Okay, so these are available in the website. So far I have discussed why I feel that the current price of 900 rupees is undervalued and is an opportunity. Is there anything that suggests that the company will continue to grow in the future? The earnings per share is right now 70. Will next year is it going to grow higher, or the reserves going to grow higher, embedded value going to grow higher? There is one valid point for that. I will just explain that. Okay, so As I said, so far we are discussing about what has happened until now, until 2025. But there are some things which are very good for the company, which are expected in the immediate future. Okay, so one thing is that SEBI has a norm that promoters cannot hold a huge quantity of their shares within themselves. The norm is that only 75% is the maximum limit the promoter can hold. Remaining 25% they have to liquidate. I think the time is somewhere around 10 years, I don't know. But right now the immediate thing is that SEBI has fixed, there is a circular which was sent to which is available in public domain, sent to LIC, that they have to liquidate at least the next 6.5% shares. That is, at least 10% should be available to the public before 16th May 2027. So this 6.5%, when they liquidate the 6.5% at the current market price of around 900 to 1000 rupees, they may get around 40,000 crore approx. So this is like another boost, a bonus they are going to receive within the next 1 or 2 years. This OFS, second OFS, can happen within this month, or maybe it can happen on May 2027, but it has to happen before May 2027. I don't know when, but they will consider a lot of things. So when that happens, there is 40,000 crore influx to the LIC. As I said, as I have discussed previously, we have seen that when they had that 21,000 crore influx, their reserves improved, and it subsequently it helped them in improving their operating profit. So you can see that operating profit increased, and it helped to boost their earnings per share. Here is the point, they received 21,000 crores and then earnings per share improved. Here there is no additional inflows, but in spite of that, this initial boost helped them to invest wiser and maybe a little bit aggressively. So they were able to improve earnings per share. So even without any additional boost, the earnings per share is increasing, maybe 10 rupees, 20 rupees per year. But now there is a situation that they will get another 40,000 crores. After that, maybe another 4 or 5 years, they will have to liquidate another 15%. But so far, no circular is available. But it has to happen. Okay. So these are all huge boost in capital for LIC, which they are using wisely, in my opinion. Okay. So this is another advantage. Okay. So my expectation is that in another 5 years time, earnings per share will touch around 200 rupees. It started with 50 rupees 2 years back. Now it's 70. Another 5 years, it can easily touch 200, because it's not just about growing the currently available reserves. It's going to be boosted by the next offer for sale. Okay. So I am expecting earnings per share to be 200. And usually the sector P/E ratio is usually respected by the market. Somehow it will achieve that. So the sector P/E is, as you have seen, that it is 75-80. So even if I assume that the sector P/E to be around 50, even in that case, for the earnings of 200, the price should be around 10,000. So for 200 earnings per share, with assuming that the price to earn P/E expansion happens from the current value of 11 gradually to 20, 30, 40, something like that. When it reaches 50, it has to be 10,000. It seems to be mathematical. It seems like maybe utopian, but it has happened in many companies. So market sometimes acts very weirdly. We can't explain why right now people are not buying a particular share in spite of a good value. And we can also cannot explain why people are buying some shares which are already overvalued. So it happens in a weird way. Fear of missing out, panics, everything. So at some point there will be a huge rush in buying this share. At that time, I expecting that, I don't know when. Nobody knows when. But the real value, the intrinsic value of LIC is much higher than the current market price. That's my judgment. That's my analysis. I have taken adequate amount of publicly available data to calculate this and coming to this decision. Nothing is precise, I accept that, but I have a very huge conviction because I have before investing or in moreover I am investing in LIC constantly, continuously. Whenever I have make some trading profits, I am putting it in buying LIC, and I am gradually accumulating. Okay. So my conviction is greater, and I also read the balance sheet of HDFC and Max Life and SBI Life, everything. and uh, it's blatantly obviously LIC is performing better, and it's also underpriced. Okay. But anyhow, I will again disclose that I am not a SEBI registered research analyst, and I never intend to become a SEBI registered research analyst. So please do your due diligence. Okay. And is, is everything rosy? Is there nothing negative about LIC? There is one point which is the biggest issue right now. That is the same offer for sale which is going to fetch some 40,000 crores for the company is also a problem in a perception basis, because market prices are always based in, particularly in short time, it's based on supply versus demand. Right now, as I said, the available free float is only somewhere around 20,000 crores. In the next offer for sale, they will be flooding with a supply of 40,000 crores. So 40, so the number of, already it is twice the amount of currently trading free floats. So there is a huge there is a huge supply, and so if there are not adequate people to buy that, if people don't are not ready to buy that at the price, of course the supply demand mismatch will cause the price to crash during the next YFS. It's possible. Okay, maybe that's the reason why they are delaying the next YFS. Probably they will do it in a staged manner. So supply demand matrix is not favorable of LIC. So every YFS the price may dip, but we don't know. As I said, market can be weird sometimes. There can be a FOMO during the next YFS, and price may also climb. That's why I am trying to accumulate even at this price now itself. So even though I am expecting the price to go down in next YFS, I am not willing to wait for that. Okay. So you can predict the pricing of companies in a long term, 5 years, 10 years time, but it's impossible to predict the value of any movement in the short term, almost near to impossible. Okay. That's why when it comes to investing, I am a very patient investor. Without a 5 years prospect, I do not buy any company. But trading, I am a very aggressive trader. So that's a totally different person. So I am very aggressive. I am ready to take huge risk. I am ready to accept losses. Okay. Okay. Anyhow, if my analysis of LIC has been useful for you, but anyhow, you also study, do your due diligence, or read the red herring prospectus, and you can decide it for yourself. Okay. Thank you.